We're CNBC, so there's a lot of wealthy people that are on this network, that watch this network, that are your clients probably. Some people I know are predicting doom. You are not.
No.
How come?
Well, we outperformed the market by 3x last year. Luxury just continues to do well. A lot of it is the wealthy, buyer is insulated from interest rates. The stock market has, the S&P is up 80% from 23 to 25. I mean, that's just fueling this market. And it's across the board. It's not even just in the United States, but it's international as well.
I wonder if the goal is to get people to establish their residency here. I understand we have a New York City tax. Taxes are high in the state, and I get that.
Yeah.
Yet a tear tax is hit for people that have second homes here, third homes, fourth homes, whatever it may be. If this is your primary home, maybe the hit is less. You think people? I know it sounds counterintuitive, Philip. You think people could put their residency here?
I think it's going to play out a bit. I have heard of that. I've heard of people doing that.
Okay. So it's not totally insane.
Yeah.
Because Guy Dami was giving me a look.
Yeah.
No, I was not, Brian.
Usually when he gives me a look, that means
But
I'm
I've only heard of a few instances, so it's not across the board. It's not been a big impact to our business at this point.
What is the existential risk, if there is one? Because people were worried about the new mayor was going to collapse real estate. And obviously none of these things happen. And I think what appears to be happening is people say, you know what, I'm not going to wait for prices to go down because they don't go down. But there has to be something out there that will scare people.
Yeah, I mean, I think you're right. I mean, I do think, like you said, I think New York City is undervalued. I mean, and what's flipping a little bit, what's interesting, like last week, there were 22 sales, 12 were co-ops, over $4 million, 12 were co-ops, and 10 were condominiums. It's usually the opposite of that. So I don't know if
How many of those were cash, Philip?
I mean, most of them, I mean, 80%. 80% of 4 million.
Cash. Where's the money coming from?
It's coming from here.
It's coming from the stock market.
Yeah.
It's coming from selling another property.
And it's coming from transfer of wealth. There is a huge transfer of wealth, and that's, from one intergenerational wealth transfer, and it's tax-free.
So what is that demo doing? Where do they want to be? Where are the folks, those that have inherited this? Maybe they're in their 40s. And what's different about this buyer, either location-wise or in terms of really what they're looking for?
I mean, we're seeing them look for, like wellness kind of things. They're looking for longevity. They're looking for the long term. So it's not just an in and out thing. So they have a long-term mindset, which is different than what we're used to.
Okay, I teased a market outside New York City that you think looks pretty good, and somebody told me what it was. It was in Texas, but it wasn't Dallas, and it wasn't Houston. San Antonio?
I mean, San Antonio is a great market. So is Austin. I mean, they. Have had
Austin, I would expect, right?
Yes,
All
yes.
the tech money, it's there. Oracle,
San Antonio,
until recently, I guess, Tim. But San Antonio, why?
I mean, you have a great lifestyle there, and I just think people are attracted to that. The prices are not as high as those other markets you mentioned, so it's more affordable, which could be a driver. And Texas is an attractive state with respect to state income tax.